Hello traders, Greg here with a market update. So look, it's been a very eventful start to the week. The big news for markets came out of China yesterday with the China stimulus measures, which was aimed at easing monetary policy and trying to help China's weaker economy and try to get GDP growth back up towards its 5% target. Now, whether or not China is successful with that and the measures are enough, the jury is still out on that. But what is meaningful is that, look, in the last week, we have seen, coordinated, monetary policy easing, from two of the largest and most important economies in the world, the US and China. So the markets have taken that obviously positive and quite bullish at the moment. So, equity markets, a lot of equity markets globally are trading at or near record highs. And also with, that easing yesterday, monetary policy easing in China, we saw a good rally in commodities. China is one of the biggest commodity buyers. So when China does well, commodities do well. So we saw, precious metals, gold and silver rally. We saw iron ore rally. We saw copper rally. We saw oil rally. With precious metals, gold continues to trend well, making a new record high yesterday at 26.65. Look, short-term targets up towards probably 2,700 for gold. Silver, though, is probably more of the market's looking at silver than gold at the moment. But the simple reason is that silver has actually rallied up to a very important technical level, up towards 32.50. That is a multi-year high for silver. If silver is able to break above 32.50, market's actually looking for a potential aggressive spike higher. And there's a lot of calls out for a silver squeeze again. So certainly keep an eye out for silver. Be very brave to sell current levels. Now moving along, yesterday we also saw an RBA meeting. So RBA, we had another hawkish hold. So look, the RBA is in no rush to cut rates. The earliest maybe that we could see the RBA cut rates maybe in February next year. And the reason why is the Governor of the Reserve Bank, Michelle Bullock, believes that they still have not completed the job on inflation. Even if they do see the monthly CPI come down a touch lower, that's not enough for them. They actually want to see CPI, inflation be, come lower and actually stay lower, sustainably lower, before they have confidence to actually, cut rates. So what does that all mean for the Australian dollar? Well, Aussie dollar at the moment seems like it's in a perfect storm, a positive perfect storm. So we have most of the world, we're seeing a lot of global easing and an RBA that certainly is not looking to ease anytime soon. So the interest differential between other central banks globally and the RBA is now coming in, which is a big positive for the currency. The second thing that we have is the Australian dollar is a risk currency. We are seeing risk in equities trade up near record highs, so that's obviously a positive for the Aussie. The Aussie is also a commodity currency. We are seeing some very good rallies in the commodity space. It's a massive positive for the Aussie as well. And then Aussie is a China proxy. So if China continues to rally off its lows at the moment, and these stimulus measures obviously start to work, that's going to flow into being a positive for the Aussie as well. Aussie is also benefiting from a weaker US dollar. Which across the board as well. So look, there's quite a lot at the moment that is helping the Aussie dollar. We're trading up as high as 69 cents at the moment, so we're up towards multi-year highs. No doubt at some stage, maybe even in the short term, we could see Aussie trade up to that psychological 70 level. But look, with a lot of confidence, all these things that are underpinning the Aussie. With a lot of confidence, Aussie is a buy on dips and medium term and to finish the year, I think we will see Aussie, trading sharply higher, well above 70 cents. So certainly, if today we do have a monthly inflation number, it is supposed to come in a lot weaker. The last one was at around 3.5% last month. We're looking at to come in closer to 3%. So there could be a knee-jerk reaction of the market selling Aussie, which will give you an opportunity to buy, because we did hear from the RBA yesterday that the monthly number is a volatile number and they are not too concerned about a one-off monthly number that comes in lower than expected. I hope you have some good trades in the next couple of days, and we'll check in with you again soon.